we started with the income statement, and I'm sure all of you have had a very good clarity about the income statement. So, sales, from the sales, you minus the cost of sales, and what you get in your hand is your gross margin. Gross margin, please remember, is also referred as gross profit. From the gross margin or the gross profit, you deduct the SG&A, selling, general, and administrative expenses, and from the SG&A, when from the gross margin, when you deduct the SG&A, what you get is your current operating income, which is also referred as COI or EBIT. uh, Current operating income, remember, is very very critical, very very crucial for any business and for our business. And why is that so? That is because bigger the amount of COI, bigger the amount of current operating income, better it is for the business. Because higher the current operating income, that means at the end of the day, more cash is going to be available in the hands of the company. And ultimately, what gives long life to a business? It is the cash that gives long life to a business. So that is how we get the current operating income. From the current operating income, we minus the restructuring cost, as we have discussed already, impairment losses, or other exceptional operating expenses or gains, and then what we get is operating income. From the operating income, we deduct some of the non-operating income and expenses. Say, for example, gains and losses on securities. And I'm sure you can understand the gain or loss that we earn or we incur on these securities is not our operating income. Gross financial charges, that is your interest cost, is not our operating expense. And likewise, financial revenue, income that we may earn, is not our operating revenue. So these are the non-operational expenses. So from the operating income, we deduct the we adjust the non-operating income and the non-operating expenses, and what we get is known as EBIT or PBIT or IBIT. So PBIT would mean profit before, what we will get is PBT or EBT. So PBT would mean profit before tax or before tax income or income before tax, by whatever we may call. Ultimately, remember, what we are trying to find out is the amount of profit which is available in our hands before deducting the tax from there. And from the PBT or from the before tax income or income before tax, once we deduct the tax amount, what we get is net income in our hands. So that is your recap of income statement.